Michael Saylor, Bitcoin set to take over the monetary system. That's the latest news about Bitcoin, and Michael Saylor approves us. Let's get started with more details in this video, so make sure you stay with us until the end. As per the information we've collected, Michael Saylor says Bitcoin has elevated Microstrategy's brand and doubts politicians like Elizabeth Warren fully understand the cryptocurrency. Microstrategy's affiliation with Bitcoin, according to Michael Saylor, has enhanced the brand, and legislators advocating for tighter supervision of cryptocurrencies don't fully grasp the sector. The Virginia-based firm was one of the first to invest in the world's largest digital asset, using just cash on its balance sheet at that time. Saylor's company has even raised loans to supplement its Bitcoin holdings. Bitcoin has been extremely beneficial to our company's image. It has increased the value of our brand by a factor of 100, Microstrategy's CEO told CNBC on Friday. Clearly, it's made billions of dollars for our stakeholders in the last 12 months. In August 2020, Microstrategy disclosed their Bitcoin investment for the first time. As of June 30th, the business intelligence software company had 105,085 Bitcoins in its possession, valued at $2.7 billion. As of this writing, the coins are worth around $4.1 billion. Bitcoin, according to Saylor, is a door opener and a discussion starter, especially with other organizations' C-suite executives. Despite the fact that Bitcoin is now trading sideways after a huge drop in May, Saylor remains bullish on the commodity. He even compared Bitcoin investments to those made in the early days of Facebook, which is today a $1 trillion social media juggernaut. Why wouldn't you borrow billions of dollars at 1% interest and put it into the next big tech digital network you thought would be the dominant Amazon, Google, or Facebook of money? CNBC spoke with Saylor. I think I might have done fairly well if I could borrow $1 billion and buy Facebook for 1% interest a decade ago. Cryptocurrencies have been in the news recently, with lawmakers advocating for tighter regulation. Senator Elizabeth Warren is one of the skeptics, claiming that cryptocurrencies are disconnected from the rest of the economy and are not long-term inflation hedges. Look, if you asked Elizabeth Warren in 2010 what she thought about Google, Facebook, Amazon, and Apple, I'm not sure what she would have responded, Saylor told CNBC. It would take 1,000 hours to truly comprehend Bitcoin, he continued. I believe that every politician in the world is being asked to comment on it right now, and I doubt that every politician has 1,000 hours to devote to it. According to a new book, Bitcoin, the digital money that many people are unfamiliar with, will one day replace the whole global financial system, performing the functions of banks, insurance firms, credit card issuers, and even trusts. The fundamental idea of Brian Kelly's book, The Bitcoin Big Bang, an investor and contributor to CNBC's Fast Money, is this remarkable scenario. Kelly says the transformation is as near as a decade away. If the Industrial Revolution was the impetus for modern economies to transition from an agrarian to an industrial civilization, then Bitcoin is the vehicle that will transfer the financial system from centralized to decentralized, argues the author, who is based in Greenwich, Connecticut. Over the next decade, creative destruction will be the mantra within financial services, and it will all be due to the enormous genius who gave his, her, or their invention away for free. Bitcoin still has a way to go. Only a few esoteric merchants, such as Overstock.com, accept it as a payment for now, making it a hobby for wealthy members of the tech jet set. Even so, some major venture capital money is pouring into Bitcoin exchanges and applications. In addition, the Internal Revenue Service of the United States finally acknowledged it this year. Even an exchange-traded fund is currently being reviewed by the Securities and Exchange Commission for approval. According to Coinbase.com, the digital currency's price was near $380 on Monday, down 67% from its all-time high hit in November 2013. The Chinese government banned payment processors from accepting digital currencies such as Bitcoin because citizens were using them to move money out of the country, circumventing capital flow controls. According to Kelly, hitches like this will be typical for Bitcoin on its way to world dominance. The sky's the limit, he adds. Once more, people discover how unique, safe, and programmable Bitcoin is. He argues the current financial system is based on centralized organizations serving as traffic enforcers and charging a fee for the service. The Bitcoin solution holds the potential to decentralize the system. First, let's go through the fundamentals of Bitcoin. As presented in the book, it was established by Satoshi Nakamoto, an enigmatic figure who goes goes by the moniker Satoshi. During the 2008 credit crisis, this individual, whose genuine identity has yet to be revealed, produced a white paper describing digital currency. Soon after, he and other Bitcoin miners created the first units of the currency. Each unit has an encrypted key that corresponds to a specific location in the so-called blockchain. This blockchain contains a unique place for each Bitcoin created. This unique design assures transaction security while also preventing counterfeiting. Because of these security features, Bitcoin eliminates a previously thought to be necessary component of every financial transaction: trust. According to the author, if trust is not required, there is no need for an intermediary, credit card companies. While completing a wire transfer, banks aren't required to act as a middleman to guarantee that both parties fulfill their obligations for a home, automobile, or a business loan. Kelly says that the Bitcoin protocol replaces the banker with the miner, and by doing so, removes the cost of a middleman. The traditional role of the banker was to be a trusted third party, watching every transaction and verifying validity. Satoshi Nakamoto designed a way for a computer to replace a banker. Bitcoin can accomplish this task securely through the use of cryptography. Even the Federal Reserve is unnecessary because Bitcoin does not require a huge governmental entity to certify that it is safe. Kelly points out that computer programming ensures this. Because there is a natural procedure for creating bitcoins via its encrypted mining process, as well as a predetermined maximum number that can be created, it doesn't need the Fed's money supply function either. What may not be known to many, but is essential to Kelly's financial takeover thesis, is that each Bitcoin has the ability to be programmed with smart instructions. For example, it can be programmed to release a certain amount of money over a designated period of time. This smart contract can be built into the Bitcoin security encryption. As a result, once it is digitally signed, the parties cannot back out of their agreement. Bitcoin's smart money characteristics can even be used to circumvent trust banks when transferring generational wealth, Kelly says. Through this programmable interface, Bitcoin can even expedite the once thought to be difficult securitization process, the domain of investment banks. Kelly states, traditional bankers remain at the heart of the financial system, ensuring that money passes from one rightful owner to another. Bitcoin miners accomplish the same job, but without having to hire hundreds of people or build skyscrapers. Credit card firms, fearful about Bitcoin's capacity to send money over the world for free, are reportedly already hearing the footfall. According to the book, MasterCard filed a patent in June of this year to integrate Bitcoins into the company's global shopping cart. To be sure, Bitcoin has a long way to go before it can take over the entire financial system, as Kelly recognizes. Before Bitcoin and Bitcoin digital wallets become widely used and approved, one must still purchase Bitcoin through an exchange using US dollars and a credit card provider. In a vacuum, Bitcoin is untrustworthy and secure, but these exchanges are not. They are only as safe as their firewalls allow them to be. The demise of Japan's Mt. Gox exchange last year as a result of a hack was evidence to this. Bitcoins worth millions of dollars are still missing. Grandma and grandpa aren't going to be switching their checking and retirement accounts to a Bitcoin-based system until Fidelity and JP Morgan Chase shut down due to the competition from Bitcoin-backed upstarts. Bitcoin may be a trustless transaction system, but it will need a majority of people to understand and trust it before it can be used to replace currencies and other financial intermediaries on a broad scale. Kelly, who began his career as an intern in Lehman Brothers, was a skeptic at first as well. Kelly and many others were drawn to Bitcoin by the collapse of his former firm and the subsequent loss of trust in the banking system. Hopefully, a catastrophe of that proportions isn't required for Bitcoin's widespread adoption. The financial crisis of 2008 fertilized the ground for economic change. The author writes, Bitcoin and the blockchain will play a starring role in the new economy. All of these facts complement Michael Saylor's saying that indeed Bitcoin is set to take over the monetary system. It's not that it will be taken by force, but that it is needed. That's all from today's video. Don't forget to like this video and subscribe to our channel. See you next time.